There are still nearly $3 trillion of money market funds in the United States. A lot of people think of them as basically interchangeable with bank deposits. We discovered in the financial crisis that's not quite the case, and there's various rules in the machine due to come out that could make that a little clearer. Agnes, what's keeping them busy over the summer?
Yeah, I mean, I think what's going on with money market funds is that they're basically the SEC has put forth two proposals to kind of make them safer, right? What we saw in 2008 is that they can be hot money just like anything else because they weren't guaranteed by the FDIC.
Right, so they're like a mutual fund that invests in very safe bonds.
Exactly.
Right? But they don't like to have a floating price,
exactly.
or they don't have a floating price.
Yeah. So the idea is to basically reform the sector to kind of stop that from happening. So either make them more like mutual funds by having a floating and net asset value, or by making them actually hold a capital buffer in case there is problems.
So they can top themselves up, so you can say, yes, we really are worth
$1. Which, of course, makes them more costly to run.
I mean, this is the thing. The industry hates both of them, right? Because, again, if you have a floating NAV, I mean, again, that's going to basically tell anybody who's putting their money there, like, you might actually lose some money here. And the other one is basically it's going to make it even harder to give any kind of return on these funds.
Bill Dudley from the New York Fed has been out saying, well, he's kind of given up on the floating net asset value thing because the industry's so set against that. But he's saying they should have a little bit of cushion sort of in the bank so they can always top up a little bit of the fund. And he's also saying that at least for big investors, if they want to take money out, they only get 95% of it to start with, and they have to wait for the other 5%.
Yeah. And this is, again, this is in line with what Shapiro, SEC, has also been saying.
Right.
But again, the industry also hates that. I mean, like, they don't like either one of the proposals.
Yeah, but it's because of the money, right? But it's not as if these are particularly onerous. I mean, if you look back to the crisis, I mean, the idea that money market funds would break the buck was always seen as a really bad thing. But, it happens. It's been proved to happen. So the idea of having a buffer is it's quite simple.
Yeah.
It's not that costly. It's just, especially at the moment with interest rates so low, it just adds to the cost for those who want to use these funds.
Right. Now the SEC is mulling this over.
Yeah, I mean, this is the thing that I think is a bit frustrating, because you have regulators actually it's not just Dudley, right? I mean, you have Treasury Timothy Geithner is also in support of this. Ben Bernanke said he's in support of this. Even Sheila Bair has said, this is a good...
As we understand, Mary Shapiro, who runs the SEC, it's a question of her getting support from the other commissioners.
Exactly, but that's the issue, right? A lot of regulators are on board with this, but there are 5 commissioners and 3 of them are skeptical. So again, until they can kind of convince at least one of the commissioners to say, yes, let's at least schedule the meeting to talk about and to actually really have a full debate about these proposals.
So are there any other proposals? Has the industry come up with anything that's remotely helpful?
Not that I can see.
Yeah.
And the industry doesn't want to change.
Yeah.
We got the SEC, and I think the thinking was maybe she would get somewhere this week, get some sort of agagreement to at least put some proposals forward.
There was talk, and there's been talk that there might be a meeting on August 29th, but on the SEC's website it still doesn't have that meeting. So I mean, clearly there's some tension there.
Okay, we'll leave it there. We'll be following that story, and we'll have more breaking views tomorrow.